everyone, welcome to Officer 24/7. My name is Niharika Valia Bhatnagar and I'm with you with the area of AFM, Accounting and Financial Management for Bankers. And today we are talking about the specific area of uh, cash flow statement. So let's begin with the session, everyone. As I told you, cash flow statement has 2 points, AS3 or IND AS7. AS3 was among the previous accounting standards, and when we look at the IND AS, which has been recently formed, right, those are because of Indian accounting standards, that is AS7. ठीक है, AS7, IND AS7 मतलब the new standards which were given by IC, which were actually formed by ICI but issued by MCA. ठीक है. So these were the points where 3 and 7, I think if you look at the differences, there were not many significant differences between the two areas, as in both the areas they agreed upon one thing, that there are three activities: operating, investing, as well as financing. Okay? So in this case, this is the first part that we believe in. Secondly, operating is for working of your business. Investing is for investing can be defined related to the area of business long-term assets, and the last is financing. Financing is related to the area of borrowing the funds. Right, so here comes the first question. Which one of the following is classified as a financing activity? Less duration class. Done, everyone? Which one of the following is classified as financing activity? Financing means the one which is related to the area of work altogether, right? Done. Cash payments to acquire property, plant and equipment. This is an investing activity because we are looking at assets altogether. Second is the cash receipts from the sale of property, plant and equipment. This is also, I can say, a part of investing activities. In the first one, this is payment, so this would be a -1, this would be a plus. Cash payments to acquire the property, equity instruments of other entities. What's going to be the answer? Cash payments to acquire equity instruments of other entities, matlab you're looking at equity of other organizations, or cash advances or loans made to other people. If you're giving money to someone else, that is your investments, because if you have money, then you'll be using it for yourself, na? But where are you acquiring it from is the point. Cash payments to acquire equity instruments of other entities is covered in this area. Done, everyone? Which of the following cash flows is considered as an investing activity? Cash payments for future contracts, cash payments to acquire equity instruments to other entities, or cash payments from the repayment of advances and loans made to the parties, or cash receipts from sale of equity instruments. What's going to be the answer, everyone? When you're looking at investing means we are having a work regarding long term. If it is about long term working, then if it's about long term working and you are investing in other than your business, matlab you are not putting into your raw material in your finished goods, you are putting this money into the other areas. For example, you are putting this money into the area of we are putting this money into the specific area of, right, we can look forward to plant and machinery. That's not regular raw material that you need. ठीक है ना? Investing is basically expansion of your business. Cash payments for the future contracts, cash payments to acquire equity instruments of other entities, cash receipts from the repayment of advances and loans, or cash receipts from sale of equity instruments of other entities. The answer is cash payments to acquire equity instruments of other entities. Done? Next question. Which of the following represents the cash flow from financing activities? Cash payments of property, plant and equipment, cash receipts from sale of inventory, cash proceeds from issuing shares, or the last one? Cash payments for future contracts. What's going to be the answer, everyone? Financing activities are related to the borrowing of funds for the business. Okay. So in this case, how are we getting the funds for the business? By issuing shares. I think we can look forward to this because rest is your regular business work, na? Property, plant and equipment, sale of inventory, as well as future contracts. Cash proceeds from issuing shares. Next question. According to Ind AS 7, which one of the following methods can be used to report cash flows from operating activities? The cash flows ratio method, or the direct method, or the indirect method, or accrual? Under Ind AS 7, which of the following methods can be used to report cash flows? In terms of cash flows, there are two methods in actual. Na? One is direct and indirect. Under Ind AS 7, they are telling about both. So in this case, it can be either. So in this case, the answer is direct method, but it can be indirect as well. Both the methods are used in terms of cash flow. Okay? Done, everyone? Let's look at the next question. Cash flow arising from transactions in the foreign currency should be recorded in the entity's functional currency by applying. What are we applying, everyone? The exchange rate at the end of the reporting period, the average exchange rate of the average exchange rate of the reporting period, the exchange rate between the functional currency and the foreign currency at the date, or the exchange rate on the date of transaction. What's going to be the answer, everyone? The cash flow, when we're talking about forex, everyone, what's the answer? When we're talking about forex, na, foreign exchange is basically related to the area of the fluctuations in currencies, है ना? The exchange rate between a functional currency and the foreign currency at the date of the cash flow is the point. We are going to prepare it as on date. Cash flow is not for the entire year, it is as on date because it takes the closing and opening value of cash. Right? Done? Next question. According to Ind AS 7, when a single transaction includes the interest and capital repayment, how are components classified? Both are operating. Interest is classified as operating, capital repayment is financing. Interest is classified as financing and capital repayment is operating. See, when we repay a loan, that repayment is always a financing activity. Repayment can never be any other thing. It can neither be operating, neither it can be totally investing, because we are paying money because we have taken a loan. है ना? So in this case, the capital repayment is always a financing activity. And if it is the financing activity, then interest is classified as an operating activity. Okay? The answer in this case is C. Interest is classified as an operating activity, or capital repayment is classified as a financing activity. Done? Done, everyone? Let's go ahead to the next point. Next question, why is the separate disclosure of cash flows from investing activity is important? Separate disclosures are required as per AS 1 even. Full disclosure of everything has to be stated because that's what AS 1 always says. So in this case, one part is clear that you have to do this. But what next you have to do is, why is the separate disclosure of cash flows arising from investing activities considered important to Ind AS 7? See, it helps in predicting the future claims on cash flows by providers of capital, matlab shareholders. It provides the insights into the operational capabilities of the entity. It indicates the extent to which the operations have generated sufficient cash flows, or it shows the expenditure made for resources intended to generate future income in future income and cash flows. Basically, Ind AS is always giving it separately about investing activities. Matlab, whatever assets we are buying, whatever assets we are selling, it is looking at this entire portion in a detailed format. Why? Because it shows the expenditure made from resources intended to generate income and cash flows. The answer is D. Due to D, it shows expenditure made from. We are looking at the cash flows, future. Then why is separate disclosure of cash flows arising from investing activities considered important according to Ind AS 7? It helps in predicting the future claim on cash flows by provider of the capital. It provides the specific area. It provides insight of the operational capability of the entity. It indicates the extent to which the operations have generated sufficient cash flows, or it shows expenditure made for resources intended to generate future income. Everyone? What's going to be the answer? The answer is shows the expenditure made for intended for future cash flows and future incomes. ठीक है ना? Done, everyone? Cash flows arising from transactions in a foreign currency should be recorded in the entity's functional currency by applying the exchange rate at the end of the reporting period, The average exchange rate for the reporting period, the exchange rate between the functional currency and the foreign currency at the date of cash flows, or the exchange rate on the date of transaction. Done, everyone? The answer is the exchange rate between the functional currency as well as the foreign currency. Done. Next question. Everyone subscribe to our channel as early as possible. If you haven't done it now, then hurry up and get it done right away. Done? Next question, everyone. How is the funds flow statement different from cash flows? Cash flow and fund flow are not the same at all. What are the differences between the two, everyone? Fund flow statement presents the net assets.